Hey, so I want to look at IWM. That is the ticker symbol. And this one pretty much mirrors the Russell 2000. It's this one in green here. Last time we looked at this was about end of May, May 29th. So some of the colors I just want to point out. So green, that signified that I felt like it was a good time to buy at that point. You can also see we listed a buy point at 172. At that point on May 29th, it was 176, so very close. I felt comfortable with that one. And then this purple here shows that I personally bought it around that date, not necessarily 529 exactly, but probably the day or maybe 2 days after I bought around that point. So I'll probably clear that. We'll actually just clear that now because we're going to update the date and there's no guarantee I'll be buying it again. We also noted resistance at 198, and we noted it was in this long-term uptrend for over a decade. So what I'd like to do is go into some news. I did a little bit of digging, found some things that I thought were worth mentioning. Then we'll go into the technical analysis, and then we'll do a little recap at the end. So as we're going through this, if you have any questions, by all means, let me know. Um, or if you just want to add any insight from your perspective, by all means, feel free to do that in the comments, and I'd be happy to read it. But uh, so let's go into some news here. So IWM, the Russell 2000. One article I found, there was this guy, Tom Linden, and he basically noted that he was taking surveys of all these advisors, about over 600, and he was saying that the biggest worry of these guys is this recession fear. Most feel that the recession is going to be kind of a soft landing, and that the period between that the last rate hike and the first rate cut is usually a good period uh, for the markets in general. This, of course, including IWM or the Russell 2000. And then down here at the bottom, I just thought that was an interesting little, I guess, a fact that we can kind of use to judge our buying behavior, especially with IWM. And we don't cover SPY. That's another version of VOO. Uh, but it should mirror the same sentiments here, where for VOO or SPY, PE ratios of 21, that seems to be like the magic number. And then for the Russell 2000 or IWM in this case, would be about 11. So I just wanted to pull up the Russell 2000 here on Yahoo Finance. You can see the PE ratio is about 12. So it's a little bit higher than that, but it's still in the ball range or the ballpark here. So it's not crazy overvalued or undervalued. It's pretty much par for the course. I guess you could argue it's, if anything, it's nearing an overvalue situation, but uh, it's within the realm, and I think that's all I wanted to check here. The next article, and this will kind of wrap up the news section, is we had this other guy, Robert Sheen, speaking on IWM and just the small caps in general, saying that up till today, and you can note the date here, late May, so a couple weeks ago, but that's just when the article came out, stating that these types of companies, they've been underperforming year to date, and continuing saying small companies don't perform if you're going into a recession, and that's kind of everyone's worry, is that we're going to go into this recession. And of course, the case building on that is if we have a slower economy, that means there's going to be less liquidity. And then also with the banking situation, that lending, that lending is going to be more restrictive all across the board. Doesn't really set up too well for the Russell or even small caps, particularly. And then, of course, he wraps up by saying there's a time and place to own them, but not when you have recession looming overhead. And so he wraps up by saying you want to stick to large caps over small caps. So that's his opinion on this point. Uh, which is valid. You know, it definitely makes sense. If you're a smaller cap type company and people aren't spending as much, that means you're going to get hit pretty hard, considering whatever your margins are and whatnot. It might create a struggle for you in the short term. And then on top of that, if you're not able to get additional financing from the banks, that could be even worse. So that's kind of a sentiment here. Uh, and I think that's why I'm okay with the Russell 2000 is because it's 2,000 of these companies. You know, not all of them are going to get hit in this type of fashion. I'm sure quite a lot are. I don't know what percentage, but uh, a percentage that's noticeable, maybe 10% or something like that. Stocks will get hit by this. It's just there's so many others that I don't think will get hit by it, or if they are, you know, it'll cycle through. Uh, it's more of a safety play to have the Russell 2000 as opposed to you know an individual stock within it. And so maybe let me share this. Uh, so some changes that have been made with this, and we can zoom in a little bit here. So we're trying to track to see if there's any changes within it. And so the Russell 2000, as we know, there's 2,000 companies in here. So no individual one is going to have a big role in this. And so here is the past, going back the previous video we made, which was like end of April, uh, versus more so today, which is just a couple days ago. So the big changes are number one, uh, three companies are not within the top 10, but of course, this could just be an ordering of situations because, again, everything is pretty much very closely related in terms of allocation. You can see everything in the top 10 only makes up 3%, which is probably a little bit elevated considering there's 2,000 stocks, but still very small allocation. Up till today, 10 stocks, still in that 3%. If we were to round it, it'd be close to 4%, but still, very small allocation to each one of these. So, sort of like what I was getting at earlier, if all 10 of these top holdings were to be faced with like uncertainty in the near term in terms of financials, I don't think it would impact the Russell 2000 very much at all, you know? Um, but yeah, just continuing with some of the changes. So we see Crocs left, RBC, and Kinsale Capital. These three aren't in the top 10. Uh, I imagine they're still very close. It's just, I guess, a couple companies kind of exceeded expectations here. So we have Super Microcomputer, Shockwave, which is still in there, but you can see everything before was like point 0.3 to high point 0.2s. Now we have a couple point 0.4s in there, all the way down to point 0.3. So just wanted to note that. Some new additions, of course, because those three left, is also Karuna Therapeutics and Celsius Holdings. So those are potential companies that maybe are having good times right now and might want to consider looking into those if you like what the Russell 2000 type stocks are doing. But that pretty much covers the news aspect. Let's take a look at the technicals here and just see what's been going on. So again, the last time we looked at this was 529, which if we zoom in, that's the screen bar right here. And if we go back, I'm just going to pull this off to the side. So we looked at this 529, we saw a price of 176. 176 is really right at the bottom. Ever since then, the following 2 weeks, it's just continued to grow. And here we are at 187. So I can update that to 187. If we zoom out a little bit, or a lot of bit, so some of the lines I'll just point out is we have this purple uptrend. That is the uptrend that we are looking at in terms of that like decade long move going back to like 2011. It's been on that uptrend, and I'm sure I could kind of scale it, but it kind of um, it's not exactly parallel, but it's very close. And here we are today, kind of in the middle uh, of that channel. It looks like we're closer to the buy or the bottom of the channel, so that's, I guess, positive. But overall, that would be like a point for fair value. You know, it's not like a screaming good deal. It's not overpriced either. It's like right in the middle. Our horizontal lines we have here are, we just were looking for points of short-term dips in terms of where's support, and that was located at about 172. Yes, it's dipped below that, going all the way down to 164, but on a couple of occasions here, we have one in May of 22, another one in December of 22, and then most recently, from like March till uh, end of May, it really just hung out at about 172. So that's why we had a buy point listed at 172. Uh, in terms of resistance, we had 198. And by the way, so the buy point, I'm going to keep that for now. Uh, yes, we're getting above that point. But again, if we zoom in and just look at what it's done previously, it's it's gone up to close to 200, pulled all the way back to 164, went up and then pulled back, found support at 172. So the fact that it's at where it is right now, it's still very possible that it'll pull back to 172 in the next, say, month or so. So I'm comfortable keeping that point. Resistance at 198. Again, just looking at the uh, most recent piece. So going back to about the beginning of 2022, there was resistance here in like January and February. It peaked above for a little bit, pulled all the way back. Again, it tested about 198 in August of 2022, again in February of this year, 2023. If we look back, is there any more? Not so much. So right now, that's kind of where we're at. What I'm going to do is draw in a faint line of resistance, because if we, at some point, we have to imagine it's going to get above that $200 mark. And when it does, that's when we'll, kind of want to be prepared. So this is another point of interest. If it does surpass 200, probably, and we can be a little bit more selective, somewhere in this range, I would say about like 225. That is kind of going to be another resistance point. I could drop it a little bit lower to like 222 and hit like these tops, or I could bring it up a little higher and hit these tops at about like 127. So it's right in that range, 225, but we're not there yet. I'm just marking that for now, and so just kind of thinking ahead a little bit. So overall, and then we have this blue line here, which is kind of like intermediary type of resistance, I would say, to, what is it, 186. You can see it tried to get above that point in June of 22, again in November of 22, and now here we are today, right at that point. So I would say when it's got to that point, one time it got rejected, two times it's got rejected, and then also there's two times where it's gone up to 198. So just based on past performance, it looks like it's 50-50. There's a 50% chance it's going to pull back potentially to 172, and we'll continue to pick it up at that point. And there's a 50% chance that it's going to rally up to 198. And then we're projecting that it'll kind of stall out at that point, maybe a little bit higher, and then pull back. So overall, I'm going to upgrade this one to a fair value. So I'm not really interested in picking up shares of this one at this point. Um, of course, things can change over time, but right now I just feel like it's fairly it's fair. You know, I wouldn't be opposed of picking it up. It's just I'm looking for things that I feel are buying opportunities as opposed to a fair value, if that makes sense. The note of long-term uptrend over a decade, I'll keep that. I guess I'll add in the fact that people are worried about a recession fears, which will hurt smaller companies. Um, but that's pretty much it. So just a quick recap here. We have IWM. Let me bring this over. IWM right here, and hopefully that's good enough to see. So not much changed, but we did update it. So currently it's at 187. We still have a buy point at 172 with resistance at 198 and a long-term uptrend over a decade long. But there are current recession fears which will hurt smaller companies. So we want to just kind of be aware of that. Uh, but otherwise, that's pretty much it. Probably won't pick this one up, but if you want to, you know, add your thoughts to this, I'd be happy to read that. Uh, Otherwise, please like, subscribe, and I'll see you on the next one.